Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome back. It is another week here in crypto land. There hasn't been too much going on in the broader market, but we did get news that the Hong Kong spot Bitcoin and spot ETH ETFs are going to go live next Tuesday, which is very exciting. There's also some other things on the horizon. A judge in a case that the SEC was involved in against a crypto company, the judge has actually thrown the book at the SEC for this one. And these two lawyers have been removed from the case, and I don't know if they were fired. So there's some things going on. Obviously, geopolitical tensions worldwide have been rising, and equities have been kind of up and down based on that. But we're going to talk about some tokens this week. I got some exciting ones for you, and we're going to start off talking about Safe Token. So the Safe Wallet, which is, they basically were created and spun out by the Gnosis team. They're considered the gold standard for multi-sig digital asset wallets, and they're widely used across the ecosystem. So the project released a governance token, Safe, in late 2022 via an airdrop. However, although it wasn't transferable until today, so people could claim the Safe token, but they couldn't transfer it, and therefore it couldn't be listed for trading anywhere. So a governance proposal recently approved transference of the token, and then it was in making it therefore sellable. So the token was subsequently listed on Coinbase and has since declined in price by about 8.7% day over day. The token now sits at $1.97, valuing the project at $1.9 billion. So more to come, I'm sure, on this one. Safe is really like a big piece of infrastructure for the ecosystem. I don't know what the estimates are now, but when I looked like over a year ago when the token was released, there was an estimate that they secured some $40 billion of crypto assets. We assume that's at least double that now based on just rise in crypto prices. But this is definitely an important project and cool to see that they finally got their token available to the public. All right, next up, we're going to talk about Bitcoin. So for those of you who, unless you've been living under a rock, you've probably heard about Bitcoin's fourth halving event this last week, this last Friday. So for those unfamiliar, Bitcoin's issuance schedule is hard-coded to cut itself in half every 4 years. When Bitcoin first launched, miners earned about 50 Bitcoin for every block they mined on the network. I know, 50. So that's slowly reduced with each halving event, and now miners are only earning 3.125 Bitcoin for every block. So very, big, important event. A lot of people kind of tend to trace the bull and bear cycles in crypto around Bitcoin's halving cycle. We're not really sure if this is necessarily true, but another important update actually got released at the same time as the Bitcoin halving last Friday. So the big important was the launch of a new token standard called Runes. Runes, which were developed by Casey Rodemore, who created the ordinal standard, which was like the other big standard that got really big on Bitcoin late last year or last fall. They went live on Friday and caused quite a bit of a frenzy. The Runes standard promised to be like kind of just better, more gas efficient over the ordinal standard. And so therefore there was a lot of hype around it. Like I said, it caused quite a frenzy. Several tokens launched. Users were racing to trade these new issues on the Bitcoin network. And the resulting flurry of activity actually drove up Bitcoin's network fees, which at one point accounted for over 3x the fees earned via block rewards. So basically in the past, the mining issuance has been basically the bulk of what miners will earn from mining Bitcoin blocks. But the idea is over time, you kind of want network fees paid in transactions by users to account for more of that, more of that block reward, because otherwise it will eventually, not become profitable for miners to participate in the network, especially when mining rewards do run out when we eventually reach the 21 million Bitcoin cap. It was pretty cool to see at one point that you were earning like up to 9 Bitcoin per block versus the 3 in addition to the 3. So the network fees have since come down and normalized as the mania around runes has died down. But many are kind of pointing to the past few days of how Bitcoin's network can become more self-sustaining long-term on fees alone. So definitely exciting and definitely something we're watching as that ecosystem continues to develop. Bitcoin is up and has recovered a bit. It is up 5.1% for the week. Okay, next up, we're going to talk about SHIB or Shibu Inu. So Shibu Inu, the meme coin project turned layer 2 protocol, announced a couple days ago that it had raised $12 million for its new privacy-focused layer 3 project. So investors including Polygon Ventures, Mechanism Capital, Big Brain Holdings, Shima Capital, Animoca, and others invested in the yet-to-launch token, Treat, which will function as a governance and utility token for the upcoming layer 3. So Shibu Inu has attempted to really shed its like meme coin background in the last year or so. It's launched a lot of different projects within its ecosystem, including Shibarium, which is the name of their layer 2, which uses the Bone token, and they're promising further functionality beyond just having this layer 2 with this privacy-focused protocol. And apparently it's gaining traction. We've got, like I said, these pretty big investors are involved in it and have funded it to the tune of 12 million. With this, SHIB is up 18% for the week. All right, and last up, we're going to talk about AASH. So AASH is a decentralized compute project, and they just saw their token shoot up this week due to an exchange listing and a new partnership announcement. So Brev.dev, which is a company, a Web2 company that simplifies AI and machine learning models, partnered with AASH to use its decentralized GPU marketplace for its compute needs. So again, AASH is a project in the DePIN sector, which is decentralized public infrastructure, decentralized physical infrastructure, and they basically offer the idea is like if you have free GPUs or kind of like spare GPU space, you can rent it out on their marketplace to people who need it in high demand. AASH has done really well this year on the back of the AI theme increasing, and companies like NVIDIA saying they just don't have enough compute to continue to offer up to the market with OpenAI, Meta, and all these other and Google and all these other companies gobbling that up. So this was definitely very good for them. The AKT token was also listed on Upbit, which is one of the largest crypto exchanges in Korea. And as a result, the token has soared. It is up 30% for the week. All right, guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's